Welcome back, everyone. IonQ stock is making headlines after a major second quarter revenue beat, higher 2026 guidance, and a new $28 million DARPA contract extension. The big question is simple. Is IonQ finally proving that quantum computing can become a real, scalable business? IonQ reported around $80.1 million in Q2 revenue, representing roughly 287% growth compared with the same period last year. More importantly, the number came in well above expectations. That is a major development for IonQ because investors have been questioning whether the company can generate consistent revenue beyond government and research contracts. This quarter provides a different picture. IonQ said growth was supported by tempo system deployments, stronger cloud utilization, and a broader commercial customer base. Around 60% of the quarter's business was commercial, while approximately half came from international markets. That matters because commercial and international growth could make IonQ's revenue less dependent on a limited number of government customers. And the company is now raising the bar. IonQ increased its 2026 revenue guidance from $260 million to $270 million previously expected, to a new range of $280 million to $290 million. In other words, management is becoming more confident about the company's ability to generate revenue throughout the year. Another important detail is that this updated guidance does not include the recently completed SkyWater technology acquisition. IonQ paid approximately $1.8 billion to acquire SkyWater, with the goal of gaining greater control over semiconductor manufacturing. That could become strategically important because controlling more of the chip production process could help IonQ scale its quantum technology and reduce dependence on outside manufacturing partners. But the acquisition also creates additional execution risk, so investors will want to see whether the expected benefits actually appear in the financial results. Then there is the new DARPA development. IonQ announced a $28 million contract extension that includes delivering 125 atomic clocks to U.S. government customers. This is significant because IonQ is trying to build a broader quantum technology business, rather than focusing only on quantum computers. Atomic clocks are extremely precise timing technologies with potential applications in communications, defense, navigation, and scientific research. So this contract supports IonQ's broader platform strategy. The market clearly liked the latest developments, and that is not surprising. IonQ is an extremely volatile stock. Over the past year, it has experienced 85 moves of more than 5%. Just days before this latest rally, the stock gained around 8.6% after Wedbush initiated coverage with an outperform rating and a $75 price target, while IonQ also announced the completion of the SkyWater acquisition. Despite the recent strength, IonQ remains well below its previous 52-week high. The stock was around $44.07 and approximately 46% below its $82.09 high from October 2025. It was also down about 5.8% for the year, so there is still plenty of uncertainty. The biggest question isn't whether quantum computing has potential. It clearly does. The real question is whether IonQ can turn that potential into repeatable revenue, stronger margins, and eventually sustainable profitability. The latest quarter gives investors a reason to be more optimistic. IonQ delivered strong revenue growth, raised its full-year outlook, expanded commercial activity, secured additional government work, and continued building a broader technology platform. But now comes the difficult part. IonQ needs to prove that this growth can continue. Investors will be watching future revenue, commercial adoption, cloud utilization, government contracts, tempo deployments, and the impact of the SkyWater acquisition. If IonQ continues beating expectations, the company could increasingly be viewed as more than a speculative quantum computing stock. It could become one of the major technology platforms competing for a leading position in the future quantum economy. But if growth slows or expectations become too high, the stock's extreme volatility could work against investors just as quickly. So for now, the biggest takeaway is this. IonQ is giving investors stronger evidence that quantum computing can generate serious commercial revenue. The next question is whether it can do it consistently. And that is what makes the next few quarters so important for IonQ stock. As always, this video is for informational and educational purposes only and is not financial advice. Always do your own research before making any investment decision.